Okay, folks, welcome to Recent Trades. This is where we'll review 3 trades that we closed out today, and it's rare that on any one given day that we close out 3 trades. But given this market environment, it's really necessary for us to use our rules-based approach to protect our profits. We always want to protect our downside risk and let the upside worry about itself. So that's exactly what we did today. I'll focus on recent trades. While yes, we made nice profits, but I want to focus more on the whys of why we exited the trades. And in the case of Apple, I'll discuss why we entered the trade and what we believed was the catalyst for the shares to proceed higher. Members, we're going to roll right into market wrap immediately following recent trades. So let's get started. So let's kick things off with URA. This is Uranium. It's an ETF. I opened this position back in July, a very small position, and then I became very aggressive right down here when we saw this double bottom setup. We knew at the beginning of the year that the rally in commodities was for real. Everybody else was in denial. Go back to my 2016, the year ahead forecast. I stated, expect a rally in commodities. There's no doubt we have one on our hands. So we broke out above this upper band of resistance. We added more, and it was off to the races. The problem is when we hit $16 per share, and we went into this bull flag formation. We had a breakout and then a failure, a breakout point failure, and that's never ever good because we know at a bare minimum we're going to come back down and retest the lower band of support. And the rule is if you break below and close below that lower band of support, you must stop out. And that's what we did today because we want to preserve our profits. That's what's critical. Preserve your profits. So while, yes, could we have sold at 1604 had we had the power of mystic projection that would be the top? Sure. But we're not going to cry about the fact that we made a heck of a profit. So URA, I'm going to look to get back involved with at some point in time in the future. But right now, there's pressure on commodities. I'm not looking to hope when I should fear. I want to protect my profits and then move back into either uranium or a better trade with a better risk-reward opportunity. Take note of both lines on Stoke trading below 50. That's never, ever good. That means bad things. So there's probably going to be lower lows on uranium. Again, we'll look to get back in at lower support levels, maybe down at 1405. And we'll check back in with uranium soon. Apple. We opened this one up yesterday afternoon after the market had closed. I was looking at the chart. I was watching an interview with Tim Cook. Very good interview. Jim Cramer was conducting the interview. And I felt that the interview was enough to move the stock higher were the technicals looking good. So I took a look at the chart. Sure enough, we had 2 days of bottoming action near the third standard deviation Bollinger Band. We bounced off of support last seen back in January, which acted as a launching pad. It was also support back here in August. So we knew we had a good risk to reward entry point. So we pulled the trigger after hours. Sure enough, it popped higher. Why did I sell? The reason I sold is because the market was weak. And while initially my price target was up to this upper band of resistance, my concern is that the stock would fade into the close if the markets really gave way. The markets closed off the lows of the day, so Apple did close respectfully, but it did close right into resistance. So I didn't want to fight it. I had a profit, quick profit, and we booked it. We look for another trade. And the last position that we closed out today was Potage. We bought aggressively down here when nobody else wanted it. Again, we saw the bull market coming in commodities. We were bullish on the precious metals, to a lesser extent bullish on agriculture plays like Potage. Potage is a 6% yielder. So in this environment, the thesis is that with commodities rallying and Potage paying a big dividend, that the shares should consolidate and break out. Sure enough, they did. Now, what happened? A couple of things. One is that we began to put in a series of lower highs beginning here on March the 7th at 1908, then a subsequent lower high at 1896, and then at 1875. Then they reported earnings. Earnings were not good. They dropped down below support, but they did hold a prior support level here, last seen back in February. So we held on to shares. The goal was for Potage to recapture this support level. It did not. Today, it broke down below the February support level. Therefore, first out, best out, protect your profits. Don't hold this stock because it's paying a dividend, because this stock could drop 6% in a day. So if you're hoping to earn 6% a year on a stock, that's a crazy bet. Never own a stock because of a dividend. If it's not behaving properly, if it's underperforming the rest of your portfolio, trim it. So those are the three trades we closed out today. Members, let's segue into market wrap, and we'll discuss our strategy as we proceed into the back half of the week, because there is a lot of economic data and these markets are growing weak. All right, let's talk first about economic data that's coming out tomorrow.